So if you put that extra $1,000 in your mortgage payment, you're thinking, oh, I'm screwing the bank now. They're not going to make money off me. No, actually, you are making more money off it. They're actually making more money off of you because that $1,000 now gives them the ability to lend out $10,000 that you just paid them. And that's the acceleration of money right there, right? If everybody started to view money like the bank does, you would actually become financially free much, much faster.
I have so much concern when I think about the boomer generation, right? Like, that's really the first generation that is retiring based off of like not having traditional pensions like our grandparents had and such. They're the first. Right. This is we're seeing the results of the lab experiment coming to fruition right now. And when I look at so many of people from that generation that are continuing to work now because they have to. Welcome back, or welcome to the Conscious Investor podcast, where we talk about all things health, mindset, and wealth building strategies. Today, I'm joined by my friend, Chris Miles. He is the host of the Money Ripples podcast. It is exceptional, and you need to pause for just a moment to make sure that you go and follow, subscribe, whatever you need to do on your favorite listening platform so that you are current with every episode, because you just don't even want to wait till the end. So I have that much confidence that you're going to enjoy this podcast episode. Chris, welcome to the Conscious Investor podcast.
Julie, so excited to be here.
I'm so excited to have you on the show. We had such an amazing conversation a few weeks ago, and I wish I could have just recorded that conversation for the Conscious Investor, because we covered all the territory. I mean, we literally spoke about health. We spoke about our businesses. We spoke about mindset. We spoke about spirituality. We spoke about, I don't think there was a piece of the conversation that was not covered in that conversation.
No, I know. Like, it would have been awesome if they were just a fly on the wall of that conversation. So, I mean, we'll try to replicate it as much as we can, right? But no, it was awesome. It was very easy to see that we were like two peas in a pod there.
Yeah, and that was why I knew I needed to fast track you onto, an episode on the Conscious Investor. And so let's go ahead and give some context as to who are you and how did you get started?
Well, besides saying like I'm a Virgo and I enjoy walks, things like that, it's not a dating profile, obviously. Yeah, so I've been known as like the anti-financial advisor or cash flow expert and things like that. And that's because of how my life really redirected in so many ways. Because for example, like growing up, I actually wanted to be a physicist or an astronomer, and then I wanted to be a music producer for like Motown. Believe it or not, I actually wanted to be like an R&B producer and things like that. But I had the feeling, the impression, the inspiration to go into sociology. Had no idea what it was, but I just felt like that's what I should major in. And it's funny, I never usually share this on podcasts, but I went to college and actually really liked it. And I did switch to psychology, but then after I realized that people were crazy, I went back to sociology again, But I didn't want a normal life, because understand that I was raised by, two very middle-class parents in Oregon. My dad worked in the automotive industry. He was very much the conservative saver, the guy that says, save everything, spend nothing. He was like the guy who always bought stuff on sale at the K-slot sales, and he was always, saying things like, hey, we can't afford this. What do you think I am? Made of money? Money doesn't grow on trees, that kind of stuff, right? And even the best one, when he told me, it's like, you know what? I gave up that Corvette to have kids. Like, oh, thanks, wow, Dad. I appreciate that,
Zinger.
Yeah, I mean, seriously. And I understand my mom was the exact opposite. She was she was an artist. She was trained by the same master painter that trained Bob Ross, So she was very much follow your dreams and your passions. Or my dad's like, no, go to college, get a good education, because I didn't. So I went to college. But I didn't want the life like my dad had, where he said that literally he felt work would kill him. He's like, wow. I will die working. I didn't want that life. And so after I went to college for a while, it became very apparent the difference between the professors that had real life experience versus those that didn't.
Right.
And so I decided at that point, I was going to go into business consulting, because I thought, I want to be a business consultant, go in. I want to be like the Bobs from Office Space, if you've ever seen that movie back in the late 90s, right? I want to go in, like tell them what to do, and then walk out with a big check. And again, I wanted control of my own destiny, my life, my freedom. And so I knew business was the way to do it. So before I got my bachelor's, with one class to go, I took a sabbatical. And I said, I'm going to find some business to start. And the business I eventually found was become a financial advisor because I figured, worst case scenario, I learned about money. I learned about how to invest and make more. And maybe I could give my dad some of his years of his life back. Right. So I did that and I ended up just staying dropped out. I never went back to finish my degree. I did try one time after I retired, but they said you got to take like a year and a half of classes. I said, forget that, like not for a bachelor's in sociology. And I make more money than people that have PhDs, right? So I just stayed dropped out. But I was a financial advisor for 4 years. And then during that fourth year, my dad said, well, when are you going to advise me? So I sat down with my dad for the very first time in my entire life, got to see his finances, when I say sit down for the first time in my entire life, it didn't mean I had never seen my dad before. I'm not an orphan. It just means that I never saw his finances. I never sat down with him in
Mhm.
that capacity where I was giving him advice versus him
Right.
giving me money advice, which was spend nothing, save everything, right? Well, I sit down and I look at his numbers and he paid off all of his debt, including his house. He paid off his house in 18 years. So proud that he was debt free. He'd stuffed money in his 401k for decades at his company, and I thought, wow, this guy is like the Dave Ramsey's older brother that Dave Ramsey copied, right?
Yes.
I mean, he did everything just to the book of what you're supposed to do. He says, Chris, I want to retire. I'm 61 years old. I'm done with this. I said, well, Dad, based on what I'm seeing here, if you want to retire today, you better hope you die in 5 years because that's when you're going to run out of money. Okay, well, what do I do then? I don't know, Dad. You did everything right. Okay, well, how do I do this? And I didn't have an answer for him. And because
Mhm.
I mean, the truth is, I could throw him in like this stock market thing or that market thing. Well, what if the market tanks? Which, by the way, this is the end of 2005. Just 2 years later, the market did tank, right? So, I mean, I couldn't give him a promise to say this is what you should do. And so it's when the student's ready, the teacher appears. And the teacher was not who I expected because the teacher was actually somebody I trained to be my student. It was somebody who I trained to be a financial advisor that then quit to go do real estate investing. And I started talking to him and he says, Chris, my life is amazing. In fact, my dad and I have partnered on a few real estate deals and we've now doubled his income as a professor at the local university. And I said, okay, come on, that's too good to be true. There's no way that that's possible. He said, well, Chris, let me ask you this. How many of your clients are financially free where they don't worry about money? Oh, you had to throw that last bit in. Well, they all worry about money. Even the retired ones worry about running out of money too soon. Okay, great. Well, how about this, Chris? How many of you guys as financial advisors are financially free, not off the commissions and the sales that you've been earning, but
Mhm.
actually doing these investments? And when I
Mhm.
was really honest with myself, and I realized that there was guys working in my office since the late 1970s, since like when I was born, and they couldn't retire either. That's when I knew there was a problem. And he said, "Well, there's your issue, buddy." And so I started going down the real estate rabbit hole. I actually quit being a financial advisor. I realized that when no one was becoming financially free, why was I teach people that and trying to stay in integrity just because my pocketbook relied upon it, just because my bank account relied on it? So I quit. I vowed never to teach about money again. I would just teach ballroom dancing and then I would do mortgages, right? A little known fact, I actually used to be one of the nation's top amateur ballroom dancers, 20 years ago and 20 pounds ago. So so that's where I kind of went down that rabbit hole, right? And as I started to learn about real estate investing and about passive income and cash flow, it's not about accumulating money. It's about getting money to work harder for you, so you don't have to work so hard for it. When I started to really understand that, later that next year, when I was 28, almost 29 years old, I was able to retire myself.
Mhm.
And that's of course when everything changed in my life because now I'm at a point of like, well, what do I do when I grow up? Like, what's my
Yeah.
life really about now? I don't have to work. I never thought that would be the case. I always thought you just work, 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 and I'll figure out later. What happens when you get to the point where you're financially independent, you don't have to work anymore? Now what?
Yeah.
And it was actually, I went to a funeral of a guy that didn't really know me. I knew him. He was in a position kind of like me. He was a financial educator of that sort. He was kind of one of those guys that taught about these real estate things that got me to break free. And he died in a plane wreck unexpectedly, him and his partner. And it changed my life because I realized when I came home from that funeral, I just knew that somehow I would be teaching people. I didn't know what it would look like, but I knew I would. And so I started teaching some close friends and people like that about what I was learning and started to help them. And then finally in 2007, I came out of retirement to officially start coaching people to do the same thing that I did, which is how to become financially free. And that's even despite, and just so you know, people will always ask me, they're like, Chris, how'd you retire twice by the time you're 39? Easy. I screwed up the first time because the recession hit. I actually went back in the rat race, had to dig myself back out of $1 million debt hole and came out of that on the other side where I retired a second time in 2016. But despite all that, throughout all those years, I've been training people and helping educate them to break free of the traditional financial advice and actually do something that's been proven to work.
Mhm.
Where financial advice has been proven not to work, even though everybody sells it like it is, because their pocketbooks are relying upon that. However, I'm teaching people what's actually been proven to work for millions of people, just like myself.
This is one of those elements that really resonated in our conversation, and we hung out, I think, on this point for a few minutes on, wow, the traditional financial planner model is, regardless of what happens to your portfolio, I'm going to be compensated and this is my livelihood. And, depending on the size of what your investment status is, like maybe I'm going to be more involved in it, maybe not so involved. And it's like we're just up to the whims, but we're told, go put our money over there. Just go. It's safer. You don't know what you're doing. So, how do you support people in really expanding their understanding of how to navigate their finances?
Yeah, so we really focus on acceleration of money versus accumulation of money, right?
Mhm,
Everybody has taught you your entire life to lock your money in prison.
mhm.
And that's not by accident. That's actually for their benefit, not yours, right? Because, for
Definitely.
example, a bank. I used to be a mortgage broker. I used to tell people if you want to stick it back to the bank, pay off your house early,
Yeah.
right? Save, don't pay that extra interest. But in truth, that's exactly what the bank wanted me to teach you. Because the
Mhm.
banks, just like any investor, love to get paid back early. They want to earn more income and cash flow. When you're paying back that loan, you're still paying back interest regardless. It's just math, right? They're going to make money. And every dollar you pay them back, they now have the ability to legally lend out 10 more dollars. So if you put that extra $1,000 in your mortgage payment, you're thinking, oh, I'm screwing the bank now. They're not going to make money off me. No, actually, you are making more money off it. They're actually making more money off of you because that $1,000 now gives them the ability to lend out $10,000 that you just paid them. And that's the acceleration of money right there, right? If everybody started to view money like the bank does, you would actually become financially free much, much faster. If you actually view money much like a business owner does, and many of you
Mhm.
are business owners, you know this, you would actually, if you would take that to personal finances, you would actually get wealthy faster. But everybody's telling you, no, lock your money up in prison. Lock it up in the equity of your house, which is what the bank wants you to do so they don't have all the risk. They want you to pay back the house because the faster you pay it back, if you happen to, for whatever reason, can't pay it back anymore, guess what? They'll just go and foreclose on your house. And the more equity you have, the more they're likely to foreclose. If you have a big mortgage and there's no equity, they're going to try to work with you as much as they can because they do not want that house back. They want the money, right? That's what they invest in. And of course, everybody says, well, yeah, but the banks, they want you to do that 30-year mortgage, right? No, they don't. Like, well, I mean, they could, and they don't, they love taking any mortgage. But the truth is, the mortgage that they want you to do is the one that they give you the lowest interest rate on. And why is that? Because they want to incentivize you. They know that they're never going to say, you know what, that 30-year mortgage, yeah, we love it because we make more interest. We're going to charge you more interest because of that. They know that that doesn't incentivize you to do the mortgage. For them to incentivize you, they're going to pay you less, or they're going to have you pay less interest. They say, hey, pay back in 10 or 15 years and we'll give you a discount on your mortgage rate. You're thinking, oh, I'm brilliant. Or hey, if you pay twice a month on your mortgage, then we'll knock off 1/4%, which just gives them more money back in their pocket, right? They get that 13, really, you just pay them 13 months every 12 months. That's how you're not paying off that early anyways.
Yeah.
But they use that to say, "Oh, this is wonderful, thank you," because they want that money back in their hands faster so they can make more money off of it. Same thing with investing. Like all the financial advisors are telling you, throw it in the mutual funds, set it and forget it. Lock up in those 401ks, those IRAs. Yeah, if you try to get to it, they're going to slap you with 10% penalties for touching your own money and then they
Mhm.
tax you. But no, no, it's good. You should do it that way. No, like they're just telling you to lock it away. And financial advisors, by the way, are not really geniuses. They don't not know how to make money investing. They know how to make money selling you the dream, right? They're selling you hopium, right? They're just selling you a bunch of hope, hoping that you'll figure it out. But the truth is that you're not really learning anything, right? Like you're not, I mean, even when the markets go up or down, what do they tell you? Stay in it. The
Mhm.
advice never changes, right?
Yes,
If it goes up, they
never.
say, well, keep buying because it's going up. Well, when it goes down, they'll say, well, keep buying. It's on sale. Well, if they really were smart, wouldn't they say, you know what? actually only buy after a market crash because you should buy low, sell high. No, they're like, no, don't time anything. You're too dumb to do that. And that's what they tell you. They'll say you lack the time, the training, and the temperament to do it yourself. So trust us, even though we have no clue what we're doing either. We're just the blind leading the blind, right? We're just guessing on what the market's going to do. We're just going to say, and this is their advice usually. It's like, well, good. Here's what you did last year. Your money went up or went down. Keep saving. That's their advice. Like you pay them for that stupid advice, right? Like, and I know I was one of them that you were paying. And so all this stuff, like it doesn't work. And so when I try to get people to break free from that, I realize this is just where money is going. Like all these companies, all these Fidelities and Merrill Lynch's and Goldman Sachs make billions of dollars off of you being ignorant to the fact that they're just making money, guaranteed fees off of you. Have you ever heard high risk creates high returns? Well, when did a higher chance of losing become a higher chance of winning? A 90% chance of losing does not equal a 90% chance of winning. Math doesn't add up, does it? But they tell you that because they want you to take all the risk so they don't have to. They let you gamble your money in the stock market while they take their guaranteed fees, whether you make money or not. That's why they tell you to save it forever, set it and forget it. Don't look at it. Don't look at the ups and downs. You'll just freak out. So just leave it in there and just trust it's going to be okay in the end, even though statistically speaking, 99% of the time, it's not okay in the end because 99% of people never have enough to really become financially free. And the reason I know that is because the stats came out from Fidelity, and not to get all nerdy on you guys, but
I was going to ask about
2023. Yeah, I mean 2023 Fidelity did, they have 45 million clients. Only 810,000 of their 45 million accounts have $1 million or more. So think of that. That's about 1.8% of their clients have at least $1 million saved up. This includes people that are, baby boomers. They're already at retirement at this point. Here's what's interesting. Transamerica did a separate survey of those people that have $1 million or more. They asked them, how confident do they feel? 35% of those that had $1 million or more said they think it'll, quote, take a miracle to be able to retire. So of those people that have $1 million, 1/3 thinks they won't even be able to do it anyways, won't be able to retire. Why? Because you're told to live on less than the interest, right? You're told to live on, used to be the 4% rule, which was created back in 1976, way outdated. That's 50 years ago. Now they're saying 3% rule. So that means if you have $1 million, you live on $30,000 a year, you're a broke millionaire. You're living below the poverty line. And so that's why when they get to that reality, they do the math. They say, wait a minute, I can't live on $30,000 a year. Even at 2 million, I'm like, now I'm living on 5,000 a month, 60,000 a year. 5,000 a month doesn't buy what it used to 20 years ago, So people are realizing like, wait, I don't know if I'll make it, even though they have over $1 million. So that's why I say 99% of the time, it doesn't work. Why would we do something that has such a big failure rate? That's like looking up that restaurant on Google and you see 99 bad reviews and then one good review from their mom. And you're like, you know what? I think I'll give it a try. No, I wouldn't give that restaurant a single try. That's what people are doing in financial advising right now. So when you break free of that and then you realize it's not about that, it's about cash flow. So take that same person, kind of going back to your original question, right? That same person that I actually had a client in California had $1 million. Exactly. He was one of those 1.8%. He had been one of the top military officials in the state of California. And he went to his financial advisor, and the financial advisor said, good, way to go, way to time the market just perfectly, because he happened to bail out of the market whenever it went down in Y2K and the Great Recession. He just happened to move his money into money markets at that same time. So even then, he beat the odds. And his financial advisor said, good, now you can live on $30,000 a year. He said, I live in California. 30,000 a year is like what homeless people live on. I can't do that. And so he started searching for answers. He started looking for podcasts. He found our Money Ripples podcast. And then he reached out and he became one of our clients. And when we started looking at that $1 million, we said, how can we get this money working for you instead of you having to keep working for this savings plan? And so he did things where he bought a couple of duplexes that he had another property manager doing all the work for him. So he's passive, right? He did some things with apartment investing. Again, he didn't find the apartment. He invested with somebody else who was managing that apartment. He had money in oil and gas where somebody else is doing it. He was very hands off. And he went from that 30,000 a year recommendation to making over 100,000 a year, not even touching his $1 million. And that was the difference, right? It's about how do you get your money working harder? How do you actually get to do those things? And that's when people start to see the light. They're like, wait a minute, this could work. It's like one of the investments in our we're not investment advisors, right? We never cross that line. But we do help people strategize and figure out like where can we find the money? How can we get it out of prison? What are ways you can use it? And what are some impossible investments? And we even have a whole network of people that I've invested with or we've added over the years, from the time I've done this that are more trustworthy. Doesn't mean that you're recommended or you have to use them, but a lot of times people want us to do that. They're like, how do you find these people? Well, you can either find them on your own and spend 20 years like I did,
Right.
or you use somebody else's network, right? And so like one of them, for example, they say you gotta have at least $100,000, but we'll pay you 1% a month for lending your money to us. Well, do the math. Like 100,000 bucks instead of $3,000 a year, 250 bucks a month. And if it's a 401k, you have to pay taxes on it, 250 bucks a month. Instead, the 100,000 is creating $1,000 a month, right?
Mhm.
Way better. Now all of a sudden there's hope. And that's
Mhm.
what got me excited. Like after I met with my dad, right? I started to realize, wait a minute, now if it's all about the cash flow, what if somebody does make 1% a month on their money? What if they have a quarter million? Now they can make 2,500 a month. That's way
Mhm.
better than me telling them you can live on $7,500 a year, right?
Right.
It changed everything for me. Like that's the thing that was so funny. I had friends like, why are you so excited? I'm like, they're like, are you making more money? I'm like, no, I'm not yet, but I'm learning and just seeing the possibility is blowing my mind.
Mhm.
And that's what really changed my life personally, but then it's also changed many, many, many other people's lives that we've worked with over the years to do the same thing where they become work optional. They work because they want to, not because they
Mhm.
have to. And it's not because they just want to live on a beach and do that. Like that's not the people we attract. We attract the people that say, I want to have options. I want to create enough financial freedom so maybe I can work part-time and do a passion project, or I can start serving in my community more, or maybe I can go and do mission trips and be able to donate and do other things. Like the whole world opens up to them that they can create a ripple effect through people's lives.
Gosh, Chris, I just love this. This is why I'm not interrupting you. And I know conscious investor, you're like, wow, Julie, you are so quiet. Like you're not even interrupting because I'm absorbing. And it's so refreshing to hear someone else, espousing and just pointing and shining the light on the path ahead because this is the minority. This
Mhm.
most people aren't on this path. Most people haven't heard this, and they have heard the Dave Ramseys and the Susie Ormans and all that. They've heard all of that, and that's what we think. And I have so much concern when I think about the boomer generation, right? Like that's really the
Yeah,
first generation that is retiring based off of like not having traditional pensions like our grandparents had and such. They're the
that's right.
first. This is we're seeing the results of the lab experiment coming to fruition right now. And when I look at so many of people from that generation that are continuing to work now because they have to, oh,
Hmm.
I got set back and oh wait, I was going to retire, I got set back. Oh, I got set back during. And so they have all these setbacks and instead of being in the driver's seat of their life and their finances, they hand it over to someone else. And in all reality, it is our responsibility. We can't just say, "Oh, well, I don't want to learn about this. I am not money wise, I'm not smart enough." Instead of making all of those excuses, we have to step into that position of ownership and say, this is my well being at stake right now. And I am the number one person who is responsible for this and who is going to take the very best care of it. Now I need to go get myself educated. So I am
Yeah.
dying to know. I know, conscious investor, I've got your back. I always do. Everyone's wondering, okay, all right, Chris, we are so tracking with you, but how? What's the first step? How do we accelerate our money? How do we do that? That sounds so good. What's our first step that we need to take?
Well, beyond what we just talked about, like that perspective and understanding like where the truth is versus the myth, right?
Mhm.
Then the next step is really like getting that money out of prison. So, for example, like I said before, everybody's told to lock their money away, set it and forget it into retirement
Mhm.
plans. Lock their money away by paying off their house, right? And that's the dream. Is like you've debt free, and you've got this little 401k plan that's going to somehow provide for you the rest of your life. And this is what you're saying. It's like with the boomers, and even now with the Xers, like our generation is starting to move into retirement. We're realizing, oh, we actually need Social Security because it wasn't enough, right? And so getting people to the point where they say, how do I get my money out of prison? How do I not accelerate paying off my house first? Now, I have some
Mhm.
people that are debt free and we might keep them that way. But there's other people that say, wait a minute, maybe this is not a good idea. Maybe we should refinance this home. Maybe we can get
Yes.
equity out of that to use that to then
Yes.
invest to generate monthly income that will not just create income for you, but still pay off your mortgage, right? Like,
Mhm.
I mean, that's the one thing that blew my mind, when I was first learning this is when there's a guy, it's funny because he's not known in the financial world now. He's more known in the personal development space for men, Garrett White or Garrett J. White. Um, I've known him for 20 years and he used to be a mortgage broker. And he would do these seminars called One Night Retirement. He'd say like, well, if you pull this money out, the equity out of your home, say that you have a house that's worth, $500,000, you've got 300,000 of equity, you pull out 200,000, say that 200,000 makes 1% a month, that's 2,000 a month. Well, if that pays for your $400,000 mortgage, you basically have a free mortgage, right?
Mhm.
Now you went from a place of, I just got to get debt free to the point of, wait a minute, this now pays for my mortgage. I am like debt free or net payment free, right?
Mhm.
And then of course, when you pay off the mortgage, then you get all the profits anyways. And so things like that. And so, how can we use that? How do we use the money that is locked away in savings? We have so many people that have money just sitting in savings, not knowing what to do because they're looking at the market saying the market's been going up ridiculously high for years. 15 years, the stock market's gone up, and only 14 of those 15 years have been up. Only 1 year has been down. That is beyond normal, right? Normally, it would be more like 4 or 5 years down for every 11, 10 or 11 years up. Well, we're way beyond that average, right? We are overdue for a correction at this point. And so a lot of people are just keeping their money in cash saying, well, when's the bubble going to pop, right? Because there's this big stock market bubble that's going to pop. Some people have become complacent, especially if they're millennials. They've never seen a down market in their entire life. They've
So
been
wild.
the whole time they've been investing, it's always gone up. Those are the ones I'm most scared for because they're the ones that believe in this fire movement, the 4% rule, and all that kind of stuff. And I can live on 4%. I had to tell one of my friends who actually works with a lot of real estate investors. He's a marketing guy though. And he's like, oh, yeah, I've got over $1 million in the stock market. I'm actually financially free right now. And I said, well, if you want to retire based on your age, it's not a 4% rule. One, if you were in your 60s, it's a 3% rule. But because you're 30 years old, it's a 2% rule. He's like, wait, you're telling me I have to have double the money now? I'm like, yeah. Like, no, I don't believe it. I'm like, you can believe whatever you want, but I was a stock trader and a financial advisor who was all about drinking the Kool-Aid of the stock market. And I can tell you the reality that let's admit it, buddy, you were in first grade when I was starting to be a financial advisor. Okay. So let's just admit that I might have seen a few more things you have in your short little time in the stock market, and that's the thing, like they get complacent, so getting people to say, well, could we get that money out of those places and get it to pay me income, right?
Mhm.
Even places like digital currencies. I get a lot of people are just like sitting on their Bitcoin forever. They're like, yeah, it hasn't really like it came back, so I'm back to where I was. But that's the funny thing. Like they said after it went down, a lot of them said, well, when it comes back, then I'll sell out. But then what happens when it comes back? They don't sell
Oh,
because like,
it's
well,
so
it's going up.
high. I have this.
It's so high. It's going to go higher to the moon, right?
Yeah.
Just to quote like, GameStop, those kind of people, right? It's like, so they'll hold on. But then when it goes back down again, they're like, well, I don't want to lose money. So I'll just ride it back down. Then when it comes back up, then I'll sell. But they never sell. So they just hold for eternity, making zero in income from that money. It just sits there as a number on a bank statement, really, is all it is,
Mhm.
or on a brokerage account. And so that's where you got to say, let's get this out and actually get it producing income for you. And that's when we start to look at other things. Like it's not just rental real estate. It's not like buying a property in your backyard. For example, I live in the western half of the United States. I would not, I would never buy a property in the western half of the United States. I always look out east, more to at least the central, more like Midwest to Southeast.
Mhm.
Much better prices, great rent to price ratios. I would rather get those properties than buying out here where it's really expensive and you're not going to get much. And I mean, you're in the panhandle of Idaho where California's rushed in and drove all the prices up. So you've seen that. So that's the big thing. And so it's not just rentals like that. I get turnkey rentals where somebody else helps me find the property. They property manage it. They take care of it for me. I just have to buy it. Or I might lend my money out. Like I mentioned, like the guy that does 1% a month, that's one example. I had one guy that offered me 15% a year for a short 3-month loan. I said, cool, I'll lend your money for 3 short months, made my 4%, got my money back, in 3 months. Like I loved it. So there's things like that you can do. There's oil and gas. I mentioned that you can get paid royalties off of gas. So if gas prices go up again, which they've kind of been depressed lately, they go up again, at least I make money off of it. Even
Mhm.
if it doesn't go up, I still make money off of it. Even I'll tell you, one of my best investments right now is a business partnership where I have a partnership of raw land. They're buying and selling raw land to people. We buy it wholesale, sell it at retail, and then they pay us back like we're the bank, like a short-term mortgage payment.
Hmm.
And so I've got raw land that we've invested in that business over $400,000, but it's kicking off over $11,000 a month from that business. So when you start to see that, you're like, oh my goodness, why would I ever want to be in a stock market that goes up and down with, like based on, whatever Trump tweets or based on whatever the feds say in a meeting or whatever it might be. It's always so fickle when I can just be getting regular, stable income each and every month or quarter. I mean, that's the thing that I like.
And yes, and that's the thing that I like as well, because I want to be in the driver's seat. And this is where it
Mhm.
is advantageous to be a recovering control freak. So there are areas in our life where we should be the control freak. And this is definitely one of them. We should be maintaining the control of our finances and not letting the horse in my mind. I'm picturing, a jockey on a great horse. It's like you wouldn't want just anybody riding your racehorse, especially somebody that they really don't have a vested interest. Like, get on the horse, ride it, don't let it run away without you. Be in control of your finances, be in control of
That's
where that
right.
money is being allocated and going. Chris, this is just so interesting, it's so exciting. And I know that I love just even the concept. We spoke about this in our initial call. It's like the concept of rippling out and money ripples. And it's not
Mhm.
about let me and I'm sure that you've heard this in his tone conscious investor, which is why he's here on the show, is like it's not about accumulating and just being like this, baller on the beach. It's about, okay, what do I get to do now that I have created this, now that I understand how my money works and how I can be the driver of my money and having it work for me. Now, whoa, what is that greater contribution that I was created for? What do I get to do with now that I have this level of freedom in my life? Now, how can I go out in the world and my unique DNA is pre-qualifying me to do something super rad. And again, that doesn't mean that you have to go and become a public speaker and go and change millions of lives. Like, if you can be more present, maybe you go to an assisted living facility, and which I have a heart for, and you just volunteer there and go. Maybe someone doesn't have family, and now you can go and you can just be that one person that they get to see on a regular basis. That's massive. That is such a massive gift. So whatever that looks like, however that translates in life, it could be on a spectrum, on a scale. And so Chris, I love this so much. I want to support you in what you're doing. And so, conscious investor, listen up. Head on over to the Money Ripples podcast. I said that at the beginning for a reason, because I knew that you're going to have to buckle up because this is going to be so good. But you can get more of this information, right? And this is complementary to what we talk about here on the Conscious Investor podcast. And for some of you, this is where you need to take your time and do a deep dive. And you just need to go like super deep into Chris's content so that you are drinking through the fire hose and that you are finally learning some principles. But Chris, you have more. You coach people, you help people. Like, let's talk about how you support people. What does that look like?
Yeah, I mean, obviously, we talk a lot about this subject, the one-on-one consulting that we do. Like I said, we're not investment advisors. We don't try to cross that line to say you should invest here, but we do offer a lot of guidance to say, well, hey, you've got money in this old 401k. Could we roll it into a self-directed IRA and then invest in real estate type deals? And which deals are better for a self-directed IRA versus cash in your pocket in a savings account? So we kind of give those like ideas and education plus connections, right? And then we even do like one thing that we're also best at, and I believe in business, you should never do anything unless you're the best at it. Otherwise, just refer it to somebody who is.
Yes.
The other thing that we do is we do a strategy called infinite banking.
Hmm.
Specifically, we have a trademarked max ROI infinite banking that we use. That's all really business owner investor friendly, right? Like it's low cost, highest possible returns you can get using that strategy. We can get your money to pay you in two places at once. So we teach a lot about that. But I'll just say this overall. I mean, these are all fun strategies, right? And they're all cool and they're sexy in a lot of ways. But I think the best part of this is that I really think that we're all put on this planet for a reason, right? Like I always believe, no matter what your faith is, wherever it might be, like you're here for a purpose. You're not here just to pay bills and die and just eke
Mhm.
out a living in retirement when you're finally at the point saying, well, now I'm too tired to do what I want. This is what liberates people. This is what gives people the ability to go become expats. Where I have a client that went, abroad. They said, "Hey, I want to go into Mexico, homeschool my kids abroad outside the U.S.
Mhm.
Give them a different kind of education, and even be able to serve people on there. Like people are less fortunate than me, and it's about people that say, I've got this passion project. Now I can finally do the thing that I want to do without the worry of money getting in the way when I'm trying to create this new business or whatever it might be. And even myself, that's why I have the Money Ripples podcast. We're in our 10th season. It's because I feel like that's the way I can give back. I love teaching. I love giving and giving people hope. And so that's the thing that I want people to do too. Is that how can you show up? Like you said, even if it's in a small way, it's you're in the grand universe and scheme of things. We're nobody, but at least one person, we're somebody, right? And that's the key.
And I know we talk conscious of Esther about hope isn't a strategy, but we do need
Hmm.
hope. It's not the
Yeah.
strategy, and that's why you wanna take it, you wanna harness resources like Money Ripples, where it's opening the windows and it's like, okay, wait, I can do something and there's a way ahead. That's that hope. And then you dive in and you get the strategy, right? There's nothing, hope is important. We need to have hope in life. That is it's a beautiful thing. But we also want to learn the strategy. And so a lot of times people will have their hope and they'll be all excited, and that fades away because they don't have a strategy to keep fueling that. And so it wanes. It's like, oh, I guess that was just a feeling I had. That was just a moment. No, it's not just a moment. That moment is now, and you're feeling that. And so it's like, okay, wait, I hear a light at the end of the tunnel, and now go get the strategies so that you can keep on that path with strength and gain massive momentum and build that life that you are looking for. Chris, you're so rad. I appreciate, your heart to contribute to others, to elevate others, to help and support them on their paths. And I'll just give you one last opportunity. Is there anything else that you're like, Julie, I really need to tell a conscious investor XYZ? Have at it.
I'll say this: just kind of good general like first steps, so you're not just on living on hopium, as you were just saying, right?
Yes.
Is these three things: is get lean, get
Mhm.
liquid, and get out. Right? Get lean means you start being a wise steward of your money. You're not being a spender, you're
Mhm.
not being a hoarding saver, you're being a wise steward. You want to know how to best use your money. So get lean. Make sure you're spending money on things that actually add value to your life, and the things that aren't, get rid of it. That also means getting more profitable with income, whether it be in business or in your job. Find ways to create more value for people. And then, of course, get liquid means get your money out of prison, like we talked about. And then get it out is once you get it liquid, then you can get it out to work for you. So now you can have more time to choose how you use your day, how you use your talents and your blessings to bless the lives of those around you.
I love that. So well said. Lean, liquid, get out. Very short, sweet, and three happens to be my favorite number. So, Chris, thanks again for coming on the show. And Conscious Investor, I know that this content, everything Chris is saying is just resonating with you. So please take that time, go subscribe, follow whatever it is on the platform of your choice to his show so that you have access to that. Okay. And then also, don't be a stranger. Share this episode with someone else. This is the message that needs to be spreading and rippling out in the world because most people don't have access to this sort of information. So you want to make sure that you find one person, and that's how you make a difference right now in a very free way. You just simply share the podcast episode with one person and let it go from there. But maybe you want to go grab coffee with that person and say, what stood out to you? Maybe that becomes someone that you start spurring each other on your own financial journey. And that becomes a very powerful opportunity. As always, you're honest. Ratings and reviews are like just rocket fuel to me and to the show. So please take a moment also to leave an honest rating and review. Let me know what stood out to you. And then Chris and I will be like, wow, that was so rad. We were able to, impact a life. Okay. So if that's you, and you're feeling that like, oh, I want them to know this was so rad, let us know because we we value encouragement also. And we love knowing what's resonating with you. And if there's something you disagree with, this is a safe space. Like, you are welcome to drop that down there also, politely, not rudely, but drop that down there also, because that's also really helpful information. We value your feedback. Until next time, cheers to your health, your mindset, and your wealth.